For years, it's felt like the entire global economy has been holding its breath, just caught in the middle of this massive trade war between the United States and China, with tariffs just climbing and climbing and supply chains stretched to the absolute breaking point. Everyone's been waiting for some sign, any sign really, of de-escalation. And well, that sign may have just arrived.
But here's the billion-dollar question, right? What exactly did we just see? Was this a genuine step toward peace, a real solution, or was it just a temporary pause? A timeout in a much, much bigger conflict. Let's unpack it.
So here's how we're going to break it all down. First, we'll set the stage for how we even got here. Then we'll dive into the deal itself, piece by piece. We'll look at the strategy behind the handshake, check out the reaction from around the world, and finally, we'll take a deeper economic look at what this all really means.
To really get why this new deal is such a big deal, we have to appreciate the absolute pressure cooker environment it was born from. I mean, this didn't just happen overnight. This thing has been building and building for years.
It all really kicked off back in 2018. The first Trump administration started rolling out tariffs, which led to a pretty tense Phase 1 deal that, let's be honest, never really hit its goals. The Biden administration came in, kept those tariffs, and even added some new restrictions on tech. And then, bam, 2025 hits and things go into overdrive. We saw tariffs escalate to a combined rate of 57%, with these huge threats of 100% tariffs hanging over everyone's head. That's the high-stakes game that brought these two leaders to the table.
So, with the entire global economy basically on a knife's edge, what actually went down in Busan, South Korea? Let's get into the nitty-gritty of the agreement.
The scene was the APEC summit in Busan. After years of trading blows from a distance, the two leaders finally met face-to-face. And the goal? Well, it was pretty clear and incredibly urgent. Pull both of their economies back from the brink of a major crisis.
Just think about this number for a second. 57%. That was the average combined tariff rate the U.S. had slapped on Chinese goods right before this meeting. That kind of economic pressure, it was causing some serious chaos for supply chains and markets all over the world.
So the most immediate thing the deal did was knock that rate down by 10 points to about 47%. And how they do it? The U.S. specifically cut tariffs that were linked to fentanyl precursors. That was a really key concession, and it got the ball rolling.
When you look at it, it was a classic give and take. The U.S. eased up on those tariffs and put a couple of investigations on hold. And in return, China hit pause on its threatened export controls on rare earth minerals, which are absolutely critical. And they started buying U.S. soybeans again, which was a huge deal for American farmers. They also suspended their own retaliatory measures.
Okay, but a deal like this is never just about the items on a checklist, right? It's all about strategy. So let's dig into why each side decided that making a deal right now was better than letting things escalate even further.
For the U.S., it was really all about stability. They needed to calm down the crazy volatile markets and prevent any major supply shocks. Tying the tariff cut to fentanyl was a smart strategic move, and getting the soybean sales back on track eased a lot of political pressure at home. Now for China, their calculus was about protecting their economic leverage. Pausing the rare earth controls for a bit was way smarter than starting a global scramble to find other suppliers. They needed to keep their tech supply chains moving and, this is the big one, dodge those potentially catastrophic 100% tariffs.
This quote from Kit Conklin over at the Atlantic Council really just hits the nail on the head. It sets a temporary floor. It stops the free fall, which is good, but it doesn't fix the foundation. All those deep structural problems that kicked off this whole fight, yeah, they're still there.
So, since the deal doesn't really solve any of the core issues, it's probably no surprise that the global reaction has been pretty cautious. This feels a lot more like a temporary truce than it does a permanent peace treaty. Markets everywhere kind of breathed this collective sigh of relief, but it wasn't a very deep one. There was some cautious optimism for sure, and everyone appreciated the short-term stability. But nobody was popping champagne, because everyone could see that one-year expiration date on the deal pretty clearly.
And that's because what's not in the deal is arguably just as important as what is. I mean, look at this list. There are no long-term guarantees. The really huge, thorny issues, Taiwan, those advanced semiconductor sanctions, TikTok, and the original sin of all this, intellectual property theft, all of it was just left on the cutting room floor.
And that brings us to the timeline. This is a one-year deal. The pause on rare earth controls, for example, it has to be renegotiated every single year. So this doesn't end the trade war. It just, well, it puts it on a recurring calendar. It basically creates a predictable annual cycle of tension and last-minute negotiation.
Now, to really understand why this deal is just a temporary fix, not some fundamental solution, it really helps to look at it through a deeper economic lens.
Okay, at the heart of this whole perspective is a simple but super powerful concept: price signals. In a free market, prices aren't just numbers on a tag. They're information. They're like road signs for the economy, telling producers what to make and consumers what to buy. They guide resources to where they're needed most.
So when you think about it that way, tariffs are a huge problem because they're direct interference. They mess with those crucial price signals. They raise costs for you and me, the consumers. They protect industries that might not be very efficient from the very competition that would force them to innovate. And as we've seen so clearly, they just provoke retaliation, which leads to this downward spiral.
So when you apply this way of thinking to the Busan deal, the real issue becomes crystal clear. Yeah, sure, lowering a tariff from 57% to 47% is better than leaving it at 57%. But it's like putting a small Band-Aid on a giant crack in a dam. The deal doesn't remove the fundamental problem of state interference, it just manages the level of distortion for the next 12 months.
Which brings us all the way back to our central question. This deal pulled the world's two biggest economies back from a really dangerous cliff. But is it a true reset button? Or is it just a tactical ceasefire? A moment to catch our breath and reload before the next inevitable escalation? The answer to that is going to shape the global economy for years to come.